Getting a student loan can be a bit stressful, but they're needed because they cover your tuition fees and living costs when you need it the most. Now, some loans have extra benefits like subsidized interest and grace periods, which makes repaying them feel a lot more manageable. What's going on, everyone? Welcome back to the channel. So in this video, we're going to check out what are the best student loans you can get from College Ave and Sallie Mae, what they offer, and of course, some of their pros and cons. I want you to understand the different options out there that give you the ability to make the best decision about funding your education and planning your future. So by the end of this video, you will have a clear understanding of which one is the best fit for you. All right, let's get into it. First up is College Ave, an online student loan portal that offers loans and other financial services for students. So they actually partner with multiple banks. They offer a range of loan options to meet students' financial needs. What makes College Ave stand out is that it allows students to pre-qualify using a soft credit check, which means it doesn't affect your credit score. They provide loans from $1,000 up to full tuition coverage and offer refinancing options for existing student loans. On top of that, the platform is rich with resources on scholarships and financial planning, making it a great solution for navigating education financing. Now, once you get pre-qualified, all the deals that you're approved for and what you can get will show up right there on the website. And it's only after you see your options will you go through the formal application that does affect your credit score. So if you type in all the information correctly, you can see all your options really fast and without it affecting your credit, which is something you really don't see. Now, as a private lender, College Ave offers both fixed and variable rate loans. And to explain the difference, a fixed rate gives you predictable and unchanging monthly payments. And at College Ave, these start at 3.47%, but a variable rate changes based on the market conditions. And at College Ave, this starts at around 4.44% for undergrads. Now, if you want to qualify for a loan from College Ave, there are some details you should know. You have to be at least 16 years old, have a social security number, and be enrolled in an eligible school. And if you're an undergrad or an international student, you need to have a cosigner. However, once you're eligible, it only takes about 3 minutes to check if you qualify and what rates you could get. Now, you're shown the 5 types of loans you have access to, such as undergrad, graduate, career, parent, or refinancing your existing student loan. Now, after you choose your loan term and your APR or your interest rate, and it gets approved by College Ave, they will contact your school to confirm that you've been enrolled and that you've been accepted. They do this just to make sure you're not asking for more than the cost of the attendance. And if you meet the school's academic progress guidelines, and if it all checks out, they will send the money directly to your school. Now let's talk about the benefit of being financed through College Ave. So along with having pretty good flexible terms, they can also help you save on how much you pay over the lifetime total of the loan, starting off with making minimum payments while you are still studying. For example, if you're steady on your payments and pay the minimum each month while you study, it shows them you're responsible and take your loan very serious. And they reward you by slightly lowering your interest terms. On the flip side, you can go for a deferred payment, which you don't make any payments until after you finish school. But of course, you're going to end up paying more interest over the life of your loan. Now, earlier I mentioned the 2 types of rates, fixed and variable. The reason I recommend College Ave is that they're all about students and getting you the best possible deal. They also have lower than average starting rates compared to other leaders in the industry, but their maximum rates are also much lower than averages for graduate students that want to pursue an MBA. The maximum rate is 17.99% for both variable and fixed, but their loans are structured in a way to help you pay off your student debt as fast as possible, so they encourage you to start paying while you're still studying. And those low starting rates are also there to help you get rid of debt faster. And if you decide that you want to try out College Ave or Sallie Mae, which is who we're going to talk about next, check out the affiliate links down below to get the best deals available, which you won't find directly on their website. So next up is Sallie Mae, which offers a range of loans for undergrads, graduates, and career training with flexible options to suit different needs. And they're known for their easy application process and competitive rates. They also provide great resources like financial literacy tools and scholarships. And with options like deferred payment and interest-only plans while in school, managing your finances becomes that much easier. Now, when comparing them to College Ave, they've got less repayment options and even fewer choices for loan terms. And although they don't charge you any loan application fees, they don't have a pre-qualification process like College Ave does. So when you do fill out their online application, it will affect your credit. So it's best to check first and see if you qualify before you go through the entire process. And just to make sure it doesn't affect your credit score. Now, when you apply, You'll need to give them your personal info and details about your school and the semesters you plan to get funded, as well as the total cost of attendance, with info like all of your related expenses, tuition, things like meal cost, equipment, and books, which is usually all information you can just get from the school's website. And just like College Ave and a lot of other lenders, your loan can't be more than whatever your school has calculated as the cost of attendance. So you should also know that getting a cosigner will give you lower interest rates. So it is worth checking if a parent or someone close with a good credit history would be willing to co-sign for you. Now, once you have all this filled in, Sallie Mae will give you a document called a loan application solicitation disclosure with a pretty detailed breakdown of all the rates, terms, and repayment plans that apply to you. If it works for you and you decide to go ahead, then Sallie Mae works directly with your school to disperse the funds. When it comes to loan terms or how long you have to pay the loan back, they have less options than College Ave. They offer either 10 or 15 years for undergrad and career training loans, 15 for MBA, law, and graduate school loans, and 20 years for medical or dental school loans. Their minimum loan amount is $1,000 and the maximum is 100% of your school's certified expenses, with a standard late payment fee of $25. Now, when it comes to repayment plans, you have three choices. You can pay interest or a set amount of $25 a month while you are still in school and during the 6-month grace period after you finish, or you can start paying after you finish studying and the grace period is up. Obviously, it's always best to pay as much as you can while you are still studying. That being said, the most important thing is the rate, and Sallie Mae offers a bunch of different rates, but because I mentioned undergraduate rates for College Ave earlier, let's just see how they compare. So for fixed undergraduate rates, Sallie Mae starts at 3.49%, just slightly higher than College Ave's 3.47%. But Sallie Mae's highest fixed rate goes up to 15.49%, which is much lower than College Ave's highest rate of 17.99%. When it comes to variable rates, Sallie Mae starts at 4.54%, a little higher than College Ave's 4.44%, but Sallie Mae's top variable rate is 14.71%, which is significantly lower than College Ave's highest rate of 17.99%. To wrap this up, choosing between College Ave and Sallie Mae depends on your priorities and your individual needs. College Ave's user-friendly approach makes it very easy to navigate loan options and find the best fit for your needs. On the flip side, Sallie Mae is well known for its competitive rates and great support services, making it a great choice as well. So whether you prioritize speed and flexibility with College Ave or lower rates with Sallie Mae, both offer reliable options to funding your education and achieving your future goals. So that's all for this review. If you found this video helpful or interesting, give it a thumbs up and subscribe to see more videos just like this. And as I mentioned earlier, if you do decide that you want to give either of these lenders a try, check out the links down in the description below. It don't cost you anything and you get a bit of a discount, which you won't find directly on their website. I enjoy hearing your thoughts and I'll try to get back to any questions or comments you leave down below as fast as I can. And finally, guys, thanks so much for watching and I'll see you in the next one.